A warm welcome and thank you for joining us today for our Sustainability Series webinar with our panel of European Divisional Council members, Lucy Hamnett and Mark Hucklesby, and panel moderator, Patrick Viljoen, CPA Australia Sustainability Leader. On the topic of, is there a gold standard for transitioning to net zero? I am Catherine Riney, President of the European Division, and I'm speaking to you today from London. I'm excited to tell you that we have members from over 38 different countries around the world joining us today, with over, unbelievable, with over 2,591 attending, making this well and truly our largest ever event for Europe. We truly are a global organization. So 3 things I want to say before I hand over. This topic is CPA Australia's priority for 2024 and of course beyond. And secondly, our organization is working on a suite of training products on sustainability related topics for our members. And thirdly, and I'm sure you will agree, as I've said many times before, this is one of the biggest challenges to how we account and audit businesses happening today. We hope we can help support all of you to do that. We are here today for that reason. And of course, that reason is to save our lovely planet. Accountants can change the world, and I have said that before. We can do, so let's do that. People I met at the IFRS Accounting for Sustainability Summit on Monday night were all saying, faster, now, faster. And a quote I want to leave with you for the moment is this one from Al Gore. One way to save the planet is to talk about it. We are here with you today, continuing that conversation. So it gives me great pleasure to now hand over to our new CEO, Chris Freeland, who also is here in London, attending the IFRS Summit, to say a few words. Chris.
Thanks, Catherine. And can I add my thanks to you all for joining this webinar. It's fantastic to have such a great level of attendance. Can I add my thanks to Catherine, Mark and Lucy and the European Divisional Council of CPA Australia for their continued support and for playing such an important leadership role in the sustainability space for CPA Australia. We've got people from all around the world joining the webinar, which evidences the huge interest in climate change and the transition to a lower carbon state. CPA Australia is firmly of the view that the accounting profession has a critical role to play in addressing the impacts of climate change. As Catherine said, I'm in London together with Patrick, and we were attending the A4S Summit, which is the Accounting for Sustainability organisation founded 20 years ago by then Prince Charles, now His Majesty King Charles. At the summit, there were delegates from 14 of the world's largest accounting bodies to discuss the role of the accounting profession in driving the transition to a sustainable economy. CPA Australia members are well placed to support businesses as they transition into a low carbon state, addressing their climate related risks, but also harnessing the opportunities that arise from this transition. Addressing climate change is a complex problem that requires an aligned, cooperative and holistic response. Systems thinking, the application of judgment and embedding rigorous measurement and reporting mechanism are skills that our CPA members already have. Once again, thanks for joining the webinar. I hope you enjoy the session today and find it as interesting and useful as I'm sure I will. Thanks, Catherine, and I'll hand back to you now. Thank you.
Thank you very much, Chris. It's very nice to have you here to address our members today. So just a quick thing, a couple more things on the on housekeeping. As we've already said, we will be recording, we will send you a link, and we'll send you any other materials that we can with that link. And just to be clear, all the speakers' views are their own and not those of their organizations. And we're going to have about 45 minutes now with our speakers, and then Patrick will take questions at the end. So please don't forget, put your questions in the Q&A or the chat as and when you think of them, and we'll come to you at the end. So I'm now going to hand over to Patrick, who has also been here, Chris said, attending the IFRS Summit, to kick off the webinar, and I'll come back at the end just to do a quick summary. All right, enjoy. Thank you very much. Patrick.
Thanks very much, Catherine, and hello from my side as well to everyone on this particular webinar. As Catherine said, my name is Patrick Viljoen. I am the Sustainability Leader at CPA Australia, based in Melbourne, but in London today. So joining me for our conversation today is Mark Hucklesby, FCPA, and Lucy Hamnett, CPA. Today we'll be talking about net zero transition plans in a little bit more detail. So over the last several years, we've seen swathes of net zero commitments, and this is both from governments and also from corporate entities. Now, public commitments are very admirable, but charting a pathway to clearly show what the transition could look like is vital. Now, transition pathways provide a touch point for things like resource allocation, strategic decision making, and also shows and evidences that approach to business model transformation. And this is really the key component, is how organizations are transitioning their business model in terms of product and service delivery to that lower carbon state. Now, if we think about reporting requirements, such as the International Sustainability Board's IFRS S2, for example, transition plans are captured in the scope of the required disclosures. Now, the standards, however, do not provide that level of specificity on what those plans should look like. And this is where the conversation of today really comes to play. Now, you may have noticed in the invite, we spoke quite a lot about the Transition Pathway Task Force. So in 2022, His Majesty's Treasury launched a new UK Transition Plan Task Force to develop a gold standard for UK businesses and for their climate transition plans. Now, the UK Transition Plan Task Force, or TPT, as we'll be referring to it, is tasked with developing standards to support both financial institutions, but also companies in preparing and disclosing their transition plans. And again, these detail how an organization aims to manage the impacts of climate change on the one side, but also then move to a net zero space. Now, that's a lot of words, but let's get stuck into the meat of the conversation. You're not here to listen to me, boring you to death. But I might want to open up with a provocative question, and this question's for both Mark and Lucy. The title of this webinar is there a gold standard for net zero plans? And I want to expand that on that question and actually say, is that potentially the TPT? So Mark, Lucy, what is your views on that? Do we have a gold standard that we can apply?
Well, let me go first and say that in my view, there isn't a gold standard out there. When we make reference to gold standard, what I think we're actually trying to strive for is a process that gets a gold medal at its completion. And I think the key for why there isn't, dare I say, a clear roadmap is because every reporting entity around the world is unique. It has its own transition goals. And therefore, the unfortunate news is, no, there's not one that you can go and pull off the shelf and use tomorrow. But hopefully we can share with you comments and insights into how you might be able to develop your own gold standard transition plan.
And that's sorry, go Lucy, sorry.
Yeah, and I think I would just add to that in terms of even beyond the goals, it's also about the culture of your organization, the leadership style internally. So the TPT, which you've obviously referenced, Patrick, is a really great toolkit because it actually thinks about all of the building blocks of what a transition plan needs to consider, but it is unique to every organization, as Mark said.
And I think that's a very important point about, sort of what organizational responses will look like, because the issue is, if you align according to scope, so for example, if you look at your own carbon emissions, and for us as an organization, we have a predominant exposure to scope 3. Now, if you have that, it drives a specific kind of response in terms of what you can and can't do. Again, the opposite of that is if you've got exposure to scope 1, for example, your transition plan would look completely different to ours in as much as what you can influence. So I think, Mark, that's a really important point about, there is no one size fits all. It's about the application of that and what it looks like for a particular organization. But thinking about that, I think the second question that I just wanted to throw out there is, we're talking here about a framework. Sometimes we talk about standards. Sometimes we talk about, if you think about the TCFD or the Task Force for Climate-Related Financial Disclosures back in the day, those were recommendations. And then you've got sort of, IFRS S2 that sits on top of all of this. And I think, Mark, my question probably would be, what is really the difference in between us thinking about frameworks regulations and standards, just in order for us to have a bit of a grasp on what we're actually talking about here?
That's a big question, Patrick, so I'll try and keep my response relatively succinct. But for me, a framework is all about setting some guiding principles to achieve an objective. And we have a number of frameworks. We've got the integrated reporting framework, we've got the framework in TPT, we've got frameworks throughout the alphabet soup, dare I say, of standards. But it's really to kind of set those guiding principles, perhaps view it as almost the equivalent of the kind of 10 Commandments. It kind of gets you going. But then obviously we do have, the standards, and that it really kind of provides the detail. It's when to recognize things, it's how you measure them, it's how you disclose them, and it's more around the process of operationalizing the strategy and telling the story of the strategy. And certainly Sue Lloyd from the ISSB has constantly said, sustainability is all about telling, the story of, transition as we try and meet our net zero objectives, set out, in COP. And then, kind of against this backdrop, we then have regulation. Now, regulation can kind of come in two forms. It can come directly from governments and say, these are the rules. Of course, the key thing about regulation is it's not negotiable, and failing to meet it could bring civil or criminal, prosecution. So it really does kind of sharpen the mind in terms of it. And I think in this whole sustainability equation that we're trying to solve at the moment, it's trying to make sure that there's real harmony between the principles, the standards, and the regulation. And perhaps we might explore just a little bit more that jigsaw puzzle and how it might come together, because I think for many people it's a very big jigsaw puzzle and not one easy to solve.
And I think that's quite a critical point, because the regulation doesn't always sit with the same person or same kind of body. And if I'm reflecting on what we see happening across Asia, so particularly looking at places like Malaysia, Hong Kong, and Singapore, a lot of the requirements aren't driven by an external body. It's more driven by the stock exchanges in terms of their own listing requirements. So that's where the regulation piece is coming from. And we also see that transitioning happening in between. Up until now, it was a comply and explain if you don't, but it's moving to that mandatory kind of space. But then the flip side of that is, if we look at what's happening in Australia, for example, so, we're going through a consultation process. Well, the consultation's done, of getting legislation through for disclosures from 1 January next year. And Mark, you being from New Zealand originally, we know that New Zealand's 1 year ahead of us in any way, which I will begrudgingly give them. So you have that piece happening. But, the kind of conversations we're hearing from the Securities Commission in Australia, or ASIC, is that they're not even thinking about enforcement at the moment. And quick thing on that, it doesn't give you a free pass, because where there's egregious departures from what you're supposed to be doing, you will get sort of, wrapped over the knuckles by ASIC. But there's also recognition about the fact, and coming back to your point about frameworks, that there's this rollout or phase in happening, and therefore you have to then stagger not only the assurance, but you have to stagger that enforcement part with that, because you can't enforce what people haven't actually grasped yet, because that's also defeating the purpose. But I think the broader point is that, it's coming from two ends. So it's carrot and stick, basically. So I usually see regulation as that bit of a stick approach, in terms of, if you haven't done it the right way, bad boy. But it's also that push approach that we see from, the broader public, in as much as, what are you doing in the public interest, and are you transitioning to that particular lower space? So totally echo your point, in as much as, there's a raft of components here, and in as much as how these things should fit together. The question I wanted just to throw back to you, Mark, is, being based in the UK, what is the expectation in terms of what's happening locally here, and particularly with that overlay of, the ESRSs in Europe, and how all of that needs to fit together from a sustainability perspective? Have you got a view on that at all?
I do have a view, and I think the simple answer is that we've got a fiercely complex landscape. But the bottom line is that there is a shadow that Europe is casting over the entire world on sustainability and sustainability reporting in particular, which many of the people listening into this webinar will be involved with, either in preparation or, you know, assurance of it. And I do think that the rubber is really hitting the road now in terms of the CSRD, you know, the Corporate Sustainability Reporting Directive, and all the standards and all the regulation, you know, that sits under that. It's quite frankly fiercely complex, and I challenge anyone, you know, to summarize it even in an hour. It's you've just got to invest some time. And I think this would be my comment, is that you do need to do some research to identify what's relevant to you. So if you are an Australian company and you have a large footprint in Europe, and it doesn't matter where in Europe it is, except remember that Britain is a part of Europe, so one just has to be mindful of that small technicality. But it is a case of not only do you have to deal with your domestic requirements, but there will also be an international commitment. Now, agreed, top end of town at the moment, but obviously there's, you know, the trickle down, and there's also, you know, the value chain. I might be a SME, but I'm a critical part of an entity that will have to report back in Europe, and that's big, you know. And I think, you know, Lucy, perhaps you can just talk a little bit, perhaps, you know, about that trickle down effect, because I think in terms of transitioning, you know, to net zero, it is having these layers of perspective. It's not just, you know, the top end of town.
Yeah, absolutely. And echo your point there, Mark, about it requiring the time, the run into these requirements and reporting. There's a lot of in-house kind of strategic thinking and work to be done before you even produce that report. So if we were talking about those big CSRD reports, they are thousands of data points that need to be reported. So don't underestimate that run in time. But in terms of getting started in that trickle-down effect, it's really about what does your company do and what is actually material, and the new regulations and frameworks are starting to look at this concept of double materiality, which is for the first time something that's being enforced, and it shows the real progression of the conversation around sustainability. Sustainability used to be about what is the negative or the positive impact your company has in the world, whereas now it's also taking that other view, so the view of how the world around is changing, and that will impact your business model and ultimately your going concern and your success in the future. So it's really understanding, where do you play as an organization? What are your touch points, positive and negative, in terms of the impacts you have, but also as the markets you operate in changes, your consumers change, your stakeholders, your supply chain, as Mark touched on, changes, how could that impact you? And obviously the environment, a big piece of climate change is how do you tackle the physical element of the changing environment as well. So once you understand what's really material to your business, those key topics, sustainability topics, if anyone has ever done a materiality assessment, it's a similar process, but it's also looking at that outside in view as well. Then you can understand, well, how do I collaborate? Where do I need to work with stakeholders on these topics? Because the transition really is a collaborative, and Chris said it at the top of the call, it's about collaborating together to transition together. No one entity can do this alone. And actually going back to the TPT, it's the first time a framework has really brought in the engagement so strongly. There's parts of the toolkit that talk about industry engagement with your value chain, and engagement with government and civil sector. So actually it's understanding the system in which you operate, and Patrick talked about system thinking. So it's starting to look at it from that perspective.
Maybe just on that, Lucy, I think you've touched on a point which is very close to my heart, in about dealing with alignment. And the issue I sort of have with net zero commitments sometimes is, you know, governments have a net zero plan, so they usually go, okay, fine, we want to do X and get us to a lower carbon state. And then the public sector obviously needs to transition as well, because that's what government has direct control over, is the public sector. And then you've got an expectation from the private sector of what they need to contribute, right? And then heavy emitters fall into that whole mix. But the question for me is, you know, accountants know really well that numbers don't just magically fall out of the sky. You know, then we start talking about creative accounting, and that leads us down a very dark path. But sometimes I think my concern is, if government's setting out to do a particular level of net zero commitment and whatever, it's that connectivity piece in between what they're doing and then what is a clear expectation from the private sector and saying, this is what you need to contribute. Because I think there's an assumption in the market at the minute that there will be overs and unders. So some organizations will overproduce or due to over-ambition, sort of drive down their emissions quite sharply, whereas others might not. And then magically it's all going to even out. And I just don't like that approach. I think it's messy. You know, and being an accountant by trade, I would prefer that level of specificity, rigor to have that happen. So I think that's a very important point. And I might just also point to the work that the XRB, or the External Reporting Board in New Zealand's done, where they talk about that connectivity piece. And they view it in terms of scenario analysis as well. But they talk about the connected funnel approach. So looking at government first, then looking at industry. And then once industry has set that level of systemic risks for themselves, businesses that underpin that industry can then test the resilience of their business models against an industry level. Now, I hasten to add, setting that systemic level of appreciation of climate change at industry level will only be as good as the trust within an industry is of the participants. Because if there's hesitation about sharing that, you know, you'll have an issue, in as much as it'll be sketchy about who's saying what and how that contributes. But I think that's a point that we have to effectively start talking about more, is that alignment piece from top to bottom. Because otherwise we might undershoot net zero by quite a large margin. You know, if people are just doing a compliance approach and not really thinking about that value proposition of switching over. And coming back to the TPT, so obviously there's 3 core elements as part of the TPT. There's the ambition piece. So that's where you sort of get, you know, the boardroom on board, you get your CEO on board, and you start driving that process. And then they talk about the action phase. So that's what we've been speaking about, I think, up until now, is how do you sort of roll that out as part of your organizational response and strategic decision making. But then there's the third component, and that's the accountability piece. So how organizations will be held to account. Now, I mentioned earlier that, you know, from an Australian perspective, there's no push to have an enforcement strategy. But I also mentioned if you do something blatantly wrong, you should be feeling really bad, because there will be implications of that. But Mark, maybe a question for you is, if we think about worst case scenarios and sort of, you know, just view it from and I know there's a question that came in about compliance, and we'll deal with that in a bit, but what is the implication of getting this wrong? And what is the implications of not doing the right thing? And potentially even waiting too long to actually get onto that journey from your perspective? And I know, you know, obviously you come from an assurance background, but what are the implications that you can see happening for organizations?
Well, I suppose ultimately for me anyway, it boils down to will you destroy the trust and confidence that the stakeholders already have in your organization? Because clearly some organizations are leading light and want to absolutely tell their sustainability story and transition, and others simply will not change and not provide the additional disclosures until the end. But trust and confidence has to be built around assurance, and you were talking about that accountability mechanism. Well, in the TPT network or framework that we have here in the UK, but and I just want to make a side point that actually just last week there was a very proud announcement by the TPT and also the ISSB that they are effectively going to converge, and essentially the IFRS knowledge hub is going to be a repository for all of this transition methodology, strategy, and I think that that is an amazingly powerful resource that people listening to this call should start trawling through. So it's the IFRS Sustainability Knowledge Hub. There's a fantastic plain English videos put on by the leaders of the ISSB on many dimensions around, as you were saying, the strategy, the execution, the thinking, and then the other elements. So if you do nothing else but go away from this webinar with, oh, I better go and have a click and a look into the IFRS Knowledge Hub, particularly the sustainability section, I think you'll learn a great deal.
I guess just to jump in on some of the challenges and as well. So Mark, you talked about some companies looking to be the leading light in sustainability and some companies looking to do the bare minimum. So really an underpinning process that we should all work with internally in our risk departments is that risk management process. What is the ambition level of the company? And it's okay to not be wanting to be number one sustainability leader in your field, but what does that mean in terms of risks to you if you're not pursuing a strong ambition? Is it loss of consumers? If as the consumerism trend is moving towards greener products or more socially positive products? Is it a loss of investors? Investor activism obviously is becoming more and more live, especially on the climate front. So director accountability from that perspective. Is it, supply chains being weakened? Do you have a dependency on a particular area of the world? I've worked with a client before where they sourced most of their organic matter for their products from Brazil, and the water scarcity and drought impact of climate change and those particular reasons had huge catastrophic effects or potential in a world where we overshoot 1.5 of actually being able to source those ingredients, so no longer have a viable product. So it's understanding what is your role in the transition and where do you need to collaborate? Do you want to be a sustainability leader, or can you just be a more supporting role within the industry in which you operate? I think we can sometimes get quite polarizing. Either you're number one or you're nothing, but there's a spectrum, and every organization has its part to play, but it's understanding what is the baseline and the minimum requirement for compliance and reporting side of things, but just as a good business strategy to ensure long-term success, what are the must-dos as an organization?
I think it's an important point as well that you raised, Lucy, about maturity and how that actually factors into what you're doing. So I'm aware that the XRB, or the External Reporting Board in New Zealand, is currently doing a piece of research about the first year of reporting. So the first reports that they're looking at in terms of what is the kind of key themes coming out of that. And, the kind of messages we're hearing anecdotally is a lot of organizations have defaulted back into that compliance approach. So tick box going through and making sure that you comply with a bare minimum of what the requirements actually are. But I would venture to say that's not good enough for the future. Because I think over duration of time, what you're actually wanting to see is sustainability becoming part of the DNA of an organization. Controversial statement here. I think in the future, what I would like to see is that sustainability no longer requires a standalone report, that it is so immersed and enmeshed in what we do that it just forms part of, or even forms the baseline of reporting for the future. But I do think, obviously, in the short term, we do need to have that level of focus on it. But there is an understanding that organizations need to go through that levels of maturity, and you have to start somewhere. But I think also what we tend to go out with as CPA Australia also is to say to members, you have to start somewhere, and don't be afraid of starting, because there's no expectation that you should get it right on day one. There is appreciation of the fact that these things take time as you step up into that. And over duration of time, as you build your maturity, you'll move into that next level or next phase, which is that embedding of sustainability across everything. But Lucy, you raised a point there about, the impact above and beyond the climate and sort of that social kind of impact. And again, controversial question, and this is more for you, Lucy, and I know you asked me not to ask you difficult questions, but I think from a transition plan perspective, should transition plans actually look more broadly and incorporate beyond climate? So for example, if we think about impact, social impact, should they actually also tailor for that? Because that is the natural connectivity point in between climate and, for example, the S component of ESG or social. Do you have a view on that, in as much as, should it have those connectivity points so we can then step into other topics as well?
Yeah, so I guess I have two answers to that. So one is a resounding yes, in that, climate doesn't happen to us in a silo from the way that society operates or the way that nature interacts, or any of the sustainability topics. So there's a resounding yes, and it goes back to that systems thinking aspect. And the TPT toolkit does start to bring in this concept of a just transition. But I guess from a practical sense of answering that question, for those on the call that are at the less mature end, I would say yes in time. So start with where you're at now. So climate is, because it's been a topic of discussion for probably a much longer time than the topic of just transition or the topic of nature, which is a more recent topic of conversation, at least here in Europe. And how do we account for nature? How do we interact with nature? Climate, there's really good systems, we call it carbon accounting. There's great accounting standards that back it, and methodologies, be it not as mature as obviously our financial accounting, because the data sets are different. That's just a great place to start in terms of understanding your impact on climate, i.e. the emissions that you produce as a company, but also how does the climate impact you? So going back to my organic matter in Brazil example that I gave before, or the changing consumerism. So it's using, and I'm talking about the TCFD framework in this, the recommendations there to do scenario analysis and look at the future of your business under different climate worlds. So I would say, to sum up, the practical answer is today focus on climate, but know that there's interrelated impacts that are needed. And obviously going back to the regulation perspective, the regulations are pushing beyond climate now. The European CSRD that we mentioned at the top of the call is the E, the S, and the G, with multiple topics under each of those.
And perhaps I could just kind of come in here in terms of dealing with particularly the social, is that, if you've got child labor anywhere, it doesn't matter whether it's one child or 100 children, that is going to be devastating for your brand, as we have already, kind of witnessed in the last, decade through various, global brand names using, child labor. So I think that's really important. And going back to your question, Patrick, about, well, we've got sustainability over here, we've got financial reporting over here, there's a separate report here, is this all going to come together? Well, I think my view is absolutely. In fact, we've had a design template for the last decade, and that's integrated reporting, right? In the sense of it's trying to recognize the various capitals that you've got, 6 of them, and how they cohesively come together. We see CPA Australia leading the way with its own integrated report. So guys, if you haven't had a look at it, get a feel for how the non-financial metrics are interacting with the financial metrics. And as I say, this is very much a journey, and it's a journey, going back to the top of the call, that is focused around integrated thinking, strategic thinking. The first part of the TPT is all about, well, what is your ambition and how are you going to get there? And I think if we can, in some ways, get out of the weeds and kind of keep that big picture, then I think we can positively deal with this topic of transitioning, rather than oh my goodness me, you know, what am I going to be doing next? You know, I've got too much in my day job. How on earth am I going to squeeze in this, you know, sustainability stuff? And just a quick comment there. I do think that those charged with governance, you know, boards are recognizing that serious investment needs to be made in the, you know, data capture, you know, dimension of this, because if you can't measure it, then you can't manage it. And I think, you know, old phrases, but they are really kind of coming up in the transition conversations that I'm a part of.
And I think that's sort of how we've kind of got to the state of the world. So, gosh, that was a quite profound comment, but you know, we've had companies committing to net zero for, you know, the past decade really, and we're still in the state of we're likely to overshoot 1.5, and even likely to overshoot the 2 degrees. So the Paris Agreement, and that's coming back to that investment piece. It was a commitment of ambition, but there was no underpinning financial planning. There was no budgets and resource allocation to actually achieving those commitments. They were quite, you know, lofty, the ambition there, but that accountability. So that's why the 3 pieces of the TPT toolkit, the 3 sections, the ambition, the action, and accountability, each are equally important. And going back to your point, Mark, around the metrics and not having financial and sustainability separate, actually, when you start to get under the hood of it, the data sets are often similar, and we need financial data sets to be able to respond to sustainability metrics. So finding synergies and efficiencies, that goes really back to the core role of an accountant, and being able to build that business case to back up the ambition, how we're going to get there, but also to business case that if we do nothing, what happens. So again, it's a self-fulfilling cycle of we need ambition to ensure that we mitigate the worst impacts for our organisation, but also we need the financial planning and budgeting and investments to achieve those ambitions.
I think on that point, so as was mentioned earlier on, myself and Chris were attending the Accounting for Sustainability Summit earlier this week. And one of the key points that came up as well is the whole conversation about what accountants do really, really well. We're really happy when it's numbers. We're really happy if we can get to a particular number. We're less sort of au fait, I think, with when it gets warm and fuzzy, and when you have non-financial impacts or narratives that you're trying to marry up with numbers. But my advice would be to all of our members is you need to get comfortable with that really soon, about how do you marry up those 2 things? How do you marry up a number with that narrative piece? Because in the sustainability space, it's a lot more about not necessarily the quantification piece. And I know the regulations are driving for quantification with a view towards disclosure within financial statements. You know, so what is the impact on your P&L and what is the impact on your balance sheet? But there is the narrative component as well. And that is much more important in terms of, if you talk about social impact, you've got a number that you're spending on avoiding social impact, to Mark's point. But what is the impact of getting it wrong? And what will that cause? So you just need to think in the Australian environment. And again, for those of you not aware of it, you can go and read up about this, but what happened in the Pilbara when there was mining activity and it destroyed a First Nations sacred site, and the reputational damage that happened as a result of that, that company is still reeling from it to this day. So I think we need to get a bit more comfortable in terms of stepping out of our comfort zone of only focusing on numbers, and then moving in terms of how do you move into that non-financial space. And there was a question that came in about business cases, and you know, the business cases usually don't get up because you know, there's no want or there's no aspiration within the organization in terms of moving into that particular space. And I think to a large degree, this is something that we need to start factoring in. It's not only about the numbers, it's about explaining that social impact. It's about explaining that environmental impact. Because if you can do that properly and you can back that up with the numbers, because accountants are conservative, right? And we're conservative for a reason, because what I always say is we anchor ambition in reality. And that's where the numbers come in. but you need to be able to step out of your comfort zone and start looking at that softer kind of explanations and be aware of what's happening in that particular space. And I'm mindful there was a question that came in, which I just wanted to throw open to you as well, asking, it's so important for the culture of an entity to become a learning organization. So one side of the coin is accountability and compliance, and then the other is learning and reflecting. And this speaks to, you know, the balanced scorecard in my mind, being a management accountant by trade. But can you speak to this approach to transition planning? So how do we sort of, I think, embed that culture and drive that culture in an organization to adapt and not feel that, you know, you're being forced into this, but it's something that you probably should be doing, if I can phrase it that way. Any one of the two, Lucy.
Yeah, absolutely. So I guess it's about a recognition that sustainability is not something the sustainability team does and they handle it for the organization, or it's not something that the accountants will do now that they have to report it in the financial report, for example. So it's no one person's job. It's really the whole entity, and it's really how do we build it into the incentive structures within the organization, the goals of departments, the internal reporting structures that you use. It's finding those mechanisms that you already have in place internally. So be it, you know, your travel reporting of particular teams internally, can we add the carbon element? Can we add carbon budgets to each team that they have to stay within? So we're adding that carbon element to the financial element. We have these mechanisms already around travel budgets, if we pick that particular example, or can we add it to the RFPs when you're going out to tender for new suppliers, as sustainability is a consideration. So it's finding how does sustainability connect with those stakeholders, and that's really through going back to the top of my top of this call when I talked about materiality. To understand what's material to your business, you need to engage across the organization to understand how it impacts their roles and how they would deal with disruption or changes in their roles. And then I guess to touch on the learning element, it's really about understanding that everybody's role is shifting. And I think we're in this time where everyone's work life is shifting. If we kind of take the word sustainability out of this conversation and put AI in there, we could probably have the exact same conversation around learning. So it's being open and understanding the time requirement, and that goes back to financial planning. What's the investment and extra resource that's required, and what are the learning programs that we can put in place? And there's really fun ways of doing that. It's making it more visual at work, so bringing sustainability messages into the office or into emails or newsletters. There's really fun ways of doing that. Carbon literacy programs are some of the ones I've seen, some of the clients I've worked with before.
Yeah, and I think that's a really sort of good, you know, sort of summary of that. And there was another question in as much as if we view, and I think we've spoken or addressed this in part, if we view ESG and sustainable finance through the lens of compliance, it becomes a regulatory compliance issue for business and thus a cost. And again, this speaks to that point I made about cost versus non-financial benefits. But should we not view ESG and sustainability through the lens of strategic value creation? And as sustainable organizations are more resilient and resilient organizations are less risky, they therefore become more valuable. And I think that's such a good question, because, and again, Lucy, to your point, just that whole, that word in there of, you know, viewing ESG sustainability through a lens of strategic value creation. We can have a whole webinar about value creation. And Mark mentioned this earlier. CPA Australia is very firm in our belief in integrated reporting. We are quite a big advocate for integrated reporting. And if you look at the fundamental, so stripping all the capitals away and looking at only the core of what integrated reporting is trying to get to, is how do you articulate your value creation or value erosion story over duration and time? That's what it wants to get to. So I think a very good question, and I just wanted to, you know, pin you on that as well in terms of what your views are. But I think this particular question resonates with me very much, in as much as view it through a value creation lens, not a cost lens. The costs will follow, but you need to understand what you're trying to do from a value creation or erosion perspective. But Mark, your views on that?
I would say, look, this is going to be hard work, guys. You know, you can't interview your computer and basically get the answers popping out on Google. This is all about culture and interacting with people. And I do think that it's a candid assessment of where your business is in terms of you know, the strategic importance of, you know, sustainability. And I think that there's a lot of you know, initiatives, you know, in Europe. You know, we've got the SFDR, you know, Strategic Finance Directive, and it's all about trying to kind of capture, you know, the eligible activities, the applicable activities, so that you can kind of monitor the change. But change won't happen unless people get into, you know, a mindset of that change is inevitable. I suppose the question is, well, what speed do we have to run at? And you know, New Zealand's led the world in some ways in terms of getting out of the gates very, you know, quickly. The UK, who only you know, back in May, they've got an you know, transition advisory council to help them design the pathway to adopt ISSB standards, and in some ways perhaps get back up to the top of the rankings. So I suppose I have to say that green does flow in my blood, you know, a little bit. And with a general election in the UK, you know, tomorrow, what we have, you know, major political parties basically saying the 28 billion pounds or whatever it is that was earmarked for sustainability is still to be spent, but it's not going to be spent, you know, kind of in the near term future. And the delay of moving to, you know, electric cars, again, it's been postponed, it's been, you know, put back. So I suppose my comment to everyone on the call today is, you know, when it comes to, you know, transitioning to net zero, you know, always keep the objective in sight. You know, there was General Montgomery in the Second World War that used that phrase, and I think that you know, it's keeping manageable objectives, and dare I say, if it hasn't already come across, you know, being positive. You know, the glass we have to work with is half full, not half empty.
Yeah, and maybe Lucy, just in terms of you work in the practical side of things, Mark, not that I'm saying that you don't, but there was a question that came in just in as much as providing examples of best practice or gold standards and sustainability reporting that companies could potentially follow to net zero. And I'm mindful, you know, we can't go into that advisory kind of slant here, but what are the kind of things that you see with your clients, Lucy, and as much as best practice that is being evidenced, and, you know, how they're doing this in a way that works across, you know, sort of entities and organizations? Is there anything that's coming out as a unified kind of approach, or, you know, benchmarks or established best practice even?
Again, I guess a classic maybe a diversion of that answer back to the point we were making earlier about every entity is unique, and we really shouldn't underestimate culture. So what works for one company will not work for others, and it's really down to, do you have that leadership buy-in? If yes, then you know, business casing, building the budgets, building a really clear financial plan, pushing the boundaries of where you can take that ambition is easier. But if you're in a less mature state, it's really about getting that buy-in of the key players. Who are the key players in your organization that need to understand it and what works for them? So yes, I totally agree. We should always be positive, but some stakeholders actually seeing the downside risk, so the true cost of what could happen might, you know, stimulate them to pursue the, you know, to make the change. Whereas some, you know, personas. So maybe it's a CFO that will take a more downside risk kind of nudge, whereas a CEO will take the upside risk of, you know, the value creation, the new markets that could be explored, the innovation, the R&D. So it's really about understanding your stakeholders you're working with to try and push that progress. And who do you need around that table? Think about the governance structures that you have in place. Are there some that you can use, you know, is it a compliance committee, or do you need to establish a new ESG steering committee, and having the right players in there? And generally we see now it is a very diverse set of stakeholders on those types of working groups. So from procurement, I saw someone's question come in around engaging supply chains. So the procurement teams or whoever's managing that part of your business, they're super important from that perspective. You know, you've got your chief people officer or your head of HR managing the cultural and helping that learning, going back to that learning question. Obviously the role of everybody here, the CFO and management accountants to help manage these metrics and ongoing reporting, building that business case, for example. You know, there's basically every department in your business is really key, but giving them the reason why they're there and the connection of sustainability to them. And going back to what's material to your business, you know, around decarbonisation, or is it around diversity inclusion? What are those key topics? It really depends on your business model and the area you operate in.
Could I just come in, you know, back to, you know, the topic, you know, is there, you know, kind of a gold standard, you know, to, you know, transitioning to net zero? I think the answer, you know, as said at the top of the call, is a gold standard, you know, can be achieved, but it's really, you know, got to be unique. And an aspect which we haven't got time to explore extensively today is the assurance dimension of all this information that is being gathered, because ultimately it comes back to, you know, trust and confidence. And perhaps I've been reading, you know, the wrong magazines, but you know, we all know about greenwashing, but there's this new phenomenon of green wishing. You know, that's where you want to move but not do anything. And I think that you know, that's where, you know, the assurance dimension, whether it's limited, and, you know, for the professional practitioners on this call, you know, people, in my experience, really don't know the difference between limited assurance, which is, you know, stage one of the assurance process, and full reasonable, you know, assurance. And so if I was, you know, transitioning to net zero, I'd be very mindful that if someone said, well, go prove it to me, show me the money, you know, have I got the controls, procedures, and evidence to support the assertions around how we're transitioning, you know, to net zero, I would keep that top of mind, you know, throughout.
And I guess that's a key role that the accounting profession can play, that bringing that rigor there, where the data sets that we use for sustainability are still maturing in of themselves. And as more and more companies build their own greenhouse gas inventories, for example, the methodologies are changing, they're improving. So I guess just a note of there is some level of uncertainty. There will be changes in the methodologies, and therefore changes in the numbers year on year, but accountants can bring that rigor and control, and so year on year, you know why the numbers have changed, and you can evidence why, and just that's kind of a key hurdle as sustainability becomes a finance and accounting role. The data sets and the numbers, it can become challenging because the methodologies aren't quite as robust as in our financial accounting.
I am very mindful that we're coming up for time, but I just wanted to close out with coming back to IFRS 1, so the overarching standard that's guiding the work we do. And maybe just as a baseline for going back on net zero plans, because remember, the transition pathway is built on the concepts that we find within IFRS 1. So the recommendation to the people on this particular call would be, go back to the 4 pillars, go back to your governance, make sure that your governance structures are up and running, reimagine and look at your risk management identification and mitigation, make sure that that is robust enough to identify new topics that might affect you or that you've got an effect on, coming back to double materiality. Then look at your strategy and your decision making, make sure that you understand concepts such as scenario analysis, and there's a raft of sources of information in the market that you can avail yourself of, and then go back into metrics and targets. That good old space that management accountants play in all the time. And with that particular one, I would focus on things like SBTI or science-backed targets, and make sure that you understand how to utilize those things and making sure that you've got an end-to-end approach. But we're running out of time for today's session, I'm afraid. We could talk, as you could well pick up, for hours on end between the 3 of us. But at this point, thank you very much, Mark and Lucy, for your very valuable time that you've spent with us today, and particularly for that value contribution today. And I hope that everyone on this call took some value out of it and can apply the principles as part of their job. Just also to note that CPA Australia will be putting out a raft of guidance documents. We also will be delivering 3 new micro-credentials dealing specifically with sustainability throughout the year. So keep us in mind and keep up to date in terms of the kind of things that we're pushing out as well as an organization. We are a membership body. You are our members. We've got your back on this one. So stick with us. And back to you, Catherine.
Thank you. Well, thank you, Patrick, Lucy, and Mark. That was fantastic. And what you've made very clear today is how multi-layered it is for businesses and individuals. In many ways, and there are many ways for us to make an impact, aren't there? It's not just about numbers, as you said. Accountants can change the world. We're well placed to be involved and make a difference. Talk about it, right? Talk about it. Talk about it with everyone. Collaborate, connect. Start there, if not anywhere else. It's about, really, isn't it, at the end of the day, it's about everyone, everywhere, all at once. We're going to make this happen. And we have to. We have no choice. So let's get on with it.
Well done.
So,
Yeah.
thank you again. Thank you again. And thank you, Chris, as well, for joining us. So look out for future webinars. Look out for our micro-credentials coming out, as Patrick has said. And have a great rest of your week. Great weekend. And yeah, enjoy the journey.
Thank you, Catherine, Patrick, Mark, Lucy, and Chris. And thank you to everyone for your participation. In the next 3 working days, you will receive an evaluation survey accompanied by the recording of this webinar. We really appreciate your feedback, as it's extremely valuable to CPA Australia to help us to deliver better events for you. Thanks again, and we look forward to welcoming you to another CPA Australia webinar soon, and enjoy the rest of your day.